Professor Andrew Appleby. Thanks for coming on the show. Thank you for being my first guest. I thought I might harass all my professors, see which ones will come on. So thanks for indulging me on that. I appreciate it.
Thank you very much. Thanks for having me. It's truly an honor.
Of course. So let's just get right into it. It's tax season. So, not everyone's favorite season. Maybe it is for you. Let's start with a Ben Franklin quote. He said famously, "In this world, nothing can be said to be certain except death and taxes." Why so morbid? Why group those two together?
Yeah, as you mentioned, they are both certain. They are not people's most favorite thing. So, we definitely have that as we're approaching tax time. A lot of people actually like this time of year because a lot of people are used to getting refunds, and so they're waiting on getting their refund checks, even though they're going to have to go through the process of filing the returns, the tax return, which is never a fun thing to do. But for others, it's not as much fun. Either you don't get the refund you thought you were going to get, or you actually have to pay some tax, maybe penalties and interest, and that's definitely not fun for anyone.
Yeah, you mentioned in class, most people actually are going to get a return. So you'd think, is it just the IRS getting in the way? Is that, causing the friction there?
I think it's more the process, right? So, as you mentioned, people tend not to look very favorably on the IRS, but sometimes the IRS gets a bad rap. It's a very kind of pressing and politicized issue right now is the funding of the IRS. And should we give the IRS more funding? I think everyone on both sides of the aisle would agree that we need more funding for IRS taxpayer services, meaning when you get audited or you get a notice, or if you have a question and you want to call up the IRS and speak with someone, you shouldn't have to wait for an hour to do that. And so I think that stuff gets in the way. It can really kind of color the way that people think about the taxing authority. And it's the taxing authority's job to administer the tax regime. And so they have to do that. I think that it's more people don't like paying taxes, but the IRS is the one that bears a lot of the brunt of their dissatisfaction. Sometimes rightfully, if you just can't get the taxpayer services that you deserve, and oftentimes wrongfully, just because that's the way the law is, and the IRS isn't the one who's enforcing the law that you don't want to, unfortunately, comply with.
Do you think that's why controversially, or maybe not so controversially, they're putting out those ads for the 62,000 maybe armed IRS tax collectors? What was that all about?
Yeah, that's another one of these things. Everything is getting politicized at this point,
Yeah.
and we need to enforce the law, right? That we need to have that in a civilized society, and we need the IRS to collect the tax revenues because we need to collect the revenue that we're then going to spend. And so things get politicized, and people maybe unfairly try to draw these pictures of things to get what they want politically. And so, we definitely seen that. We saw a huge amount of the funding that was allocated to the IRS get clawed back. And it looks like there is at least some sort of agreement now on some of that funding. And, one of the big pieces there is that, and maybe people on both sides of the aisle would agree with this, is that we want to ensure especially that the higher income earners are getting audited and they're paying their fair share. We don't want to bother people who aren't at that high level with audits that they're going to have to try to defend or pay someone to defend for them, especially if we have taxpayer services that aren't as responsive as we might like. And so that's what the politicians certainly don't want their constituents will be unhappy about, is if they get audited, you're making $50,000, $60,000 a year, and now you're getting audited, and someone who's a billionaire is not getting audited. And so that's really the kind of the issue. And even though most would agree with that point, ensuring that if we give more money to the IRS for enforcement, that they're actually going to enforce that only as to the higher net worth individuals is something that I don't think people are very trusting of. And so that's sort of been this premise that we've seen with the debate about how to fund the IRS.
Yeah, because it's not going to be, like you said, the everyday citizen. They're not hiring more people to go after them because there's no money there, respectfully, but.
Yeah, that's exactly right. It's sort of tough, though. The IRS, again, is in a bit of a tough spot because they need to enforce the law. And if someone is just doing something wrong, so let's just say that you file your tax return and whatever the numbers are on there don't match up with a W-2 or a 1099 that the IRS received from the reporting, that's a problem. You didn't file your return properly, and the IRS needs to, just to maintain some sort of confidence that they're actually enforcing the law, they need to move on that. They need to enforce those mistakes and work through that. And oftentimes the individuals making those mistakes are lower income taxpayers because they don't have a high-end accountant who's doing their tax returns. They may have a lot of the urban tax preparers. There's a huge lineage of fraud there with those tax preparers. And so, that it's tough because, there's not much money at stake, but the overall confidence in our system is at stake, and the IRS can't really just ignore mistakes that they catch. And so that's where we end up with this situation where we do see a lot of lower income individuals being audited not because they're taking an aggressive tax return position, but because they maybe transpose the number when they file their return. So, it's kind of a tough situation with our current regime of voluntary compliance in our tax system.
Gotcha. I just used TurboTax to file mine. What are your thoughts, opinions on TurboTax? I thought it was pretty easy. I got to see the actual forms from taking your tax classes. I was like, okay, looks pretty good. They tried to charge me for earned Coinbase rewards, which I didn't do anything. Somehow that just ended up there with a big zero on there. But
yeah, it's really interesting. All the tax software that's out there, TurboTax, and there are a bunch of others as well. It's great that we have that now compared to, 15, 20 years ago before we really had those options. And so now we do, and they're getting much better and they're asking questions. And one of the things that we've talked about in class is we need to understand the taxpayer, whoever's filling out the form on TurboTax or the software, you need to understand why it's asking you these questions. And if you don't understand why it's asking the question, you might not be able to answer it properly. So, that's always a tough piece too. It's the old kind of computer programmer acronym of garbage in, garbage out. And so you have to, TurboTax is only as good as whoever's entering in that information. I personally have a bone to pick with TurboTax because they do not support the opportunity zone forms. And so I don't know why they do not do that, but that really makes me angry. So anyone investing in opportunity zones they have to deal with something other than TurboTax or some sort of workaround. So if TurboTax is listening, you should fix that.
Wow. So for certain things, they don't even have the opportunity for you to put it down.
Yeah, exactly. And I'm not sure why. They just don't support those forms. And so if you have an opportunity zone and you decide to file your tax returns using TurboTax, you can't file electronically. You have to print it out, do the form manually, and then send it in. And that's always an issue. There are a lot of reasons why you do not want to file paper. You'd rather file electronic, especially if you get a refund. It's going to get processed much quicker. And there's a lot of tax fraud out there where people will use your social security number, file a return, claim some massive amount of a refund. They collect it in their bank account, and then you try to file and get your refund, and they say, oh, you've already filed, and we're not going to give you that. And so that's a huge potential issue too. Why you want to file as early as you possibly can, and it's always tough if we have potential tax legislation that's going to change however you want to file your tax return in a particular year, as we do this year. But you want to file early, you want to file electronic. And so that's one of the reasons the IRS wants that too. They just can't handle all of these paper forms, and they lose half of them. And that's a different conversation. But
yeah, that's probably not too good. Or you could just pay the $100 audit protection TurboTax offers, right? It comes straight out of your return.
That's right. That's right. Yeah. I know some people who do that. My issue with that, I guess that's cheap, right? If you end up getting audited and they're going to defend you on the audit and all that, I just don't trust whoever would be defending me on behalf of the TurboTax. So I usually am not checking that box for the additional money. But
just some first-year lawyers, they know what they're doing. They went to law school. So going off of TurboTax, stuff like that, not everyone, a lot of wealthier people online talk about tax write-offs. What's a tax write-off? You can write this off. You can buy it. Is it really just as simple as registering an LLC, getting a G-Wagon, and you're all off to the races?
Yeah, so maybe lesson number 2. This may be on YouTube, but you have to be very careful about getting any advice from YouTube. There's a lot of people out there, YouTube, Instagram, trying to promote various types of deduction strategies, and they're getting paid for the clicks. So they're often as generalized and maybe as kind of egregious as possible, so they get the people watching their videos.
Yeah.
The short answer is no. You have to be really careful about that. And there are a lot of restrictions and requirements for deductions. You can't just go, and they're irrespective of forming an entity. So a lot of people think, oh, I'm just going to form an LLC, and now automatically that's a business.
Perfect.
It's a trade or a business. I get all my deductions. That's not how it works. It really doesn't matter if you're doing it individually or you form an LLC. What we have to look at is, what are you doing? How do we characterize this activity? Is it a trade or business pursuant to the guidelines that we have in the statute and case law? And then maybe you can deduct this stuff, but still there's all kinds of limitations. The biggest limitations being out there with vehicles. So looking at the deduction for vehicles. So it is definitely not as easy as go form an LLC and then you get to deduct the $130,000 price of your brand new G-Wagon. Unfortunately, or maybe fortunately, that's not really how it works. So,
well, I guess it gets the clicks a little bit.
That's right.
Yeah, I would think that wouldn't even sound like sound advice, but everyone talks about, even if they do have an LLC, like, oh, that's a write-off. That's a write-off. This is a write-off.
Yep, absolutely. And there's a lot of that, especially with vehicles. So, and we talk about this a lot. We have various provisions in the code that try to avoid abusive write-offs when there's some sort of personal benefit. So generally speaking, we don't want to subsidize people's personal consumption behavior. And what we do want to allow deductions for legitimate business expenses. And when we have some things that sort of blend business and pleasure, how do we handle that? If you have a vehicle, let's say you have a legitimate business and you have a vehicle and you use it for work, but you also use that for some of your personal benefit. Like, how does that work? And so the code says you need to use it at least 50% for the business to even get any deduction. And then you're supposed to do a ratio based on the number of miles you're driving or something like that. So if you're using that G-Wagon for some personal benefit too, you shouldn't be able to deduct the full cost of the G-Wagon, only the portion of the G-Wagon that you're using for your business. And then even then, we have a ton of other restrictions on deductibility of our vehicle costs. And there are some workarounds. And so there's at least a thread of truth in some of those YouTubers' tax advice. We do have these preferential provisions like IRC 179 and 168K that will allow you to deduct the entire cost of a vehicle in the first year in which you buy it. And so that's a huge benefit. Instead of depreciating this vehicle maybe over 5 years, now you get to deduct that full $130,000 in the first year. And so there are benefits there, but you have to comply with a lot of different requirements. And one of the reasons they use the G-Wagon or the Land Rovers, things like that, is that there's actually a weight requirement. And so the design of the code is for, okay, you're buying a truck, some sort of vehicle that you're actually using for work. And so that's why they sort of used as a proxy this weight requirement. And the big SUVs satisfy that. So 179 has a new provision that says if it's an SUV, we have a different limitation. And so we have all these types of limitations that are dealing with workarounds that people have discovered throughout the process and over the years.
Just put a Band-Aid on it. We'll move on.
That's right.
That's how it works. What about real estate? Tax code incentivizes real estate as well as a little bit of entrepreneurship with all these business deductions, things like that.
Yeah, there's a lot of that. A huge portion of the tax code really does incentivize real estate purchasing. So there's a lot, even just for personal real estate. So things like the IRC 121 exclusion for the sale of a principal residence. Why should we exclude that gain? Well, we want people to go and buy these houses, and we want to ensure when they sell their houses that they get that full, at least maybe full amount of gain without being taxed, so they can go and buy another house or whatever it might be and keep our real estate industry moving along at least. So we see a lot of that on the personal side, and then certainly on the investment side. It's just the way in which the depreciation mechanism works with an asset that doesn't actually depreciate in economic value. And so if you go buy a machine or a car or a truck, theoretically that actually depreciates in value economically. You can't sell a 10-year-old car what you could sell a brand new car for. And again, all this kind of changed with COVID pricing for everything, but maybe we're getting back to reality. And so you buy this car and it depreciates in actual economic value. And so you get a corresponding depreciation deduction for tax purposes. But with real estate, that usually does not go down in value. It usually increases economically in value. It appreciates. And so there's this disconnect when you're getting a deduction for depreciation, but your property is actually appreciating in economic terms. And so that's where we just have this sort of the stemming of this huge benefit for the real estate industry because we have that situation happening.
And that depreciation is like when you go to improve the property, things like that, you subtract or.
Yeah, exactly. Purchase or improve the property. And so
Gotcha.
You go buy property. Land itself is not depreciable because that theoretically is not subject to wear, tear, or obsolescence. Those who live on the coast might disagree with that at this point, but theoretically that land is going to be there and it's not going to depreciate in economic value. It's not going to depreciate physically. It's not going to erode. And so we only get to depreciate the actual cost of the structure. But even there, a lot of the cost of the structure can increase because the structure is inherently tied to the land. And so the prices for the entire thing ultimately increase. At least historically, that's how it's worked, other than kind of the 08-09 dip that we've seen. And so when you have this asset that you've either purchased, so all the money you spent to purchase it or to improve it, you get to take deductions, even though the actual asset is not depreciating in value. And then on top of it all, to just add, I guess, a double benefit, triple benefit, whatever it might be, you don't actually have to come out of pocket with the cash. You can go get a mortgage. And so you can borrow the money, huge amount of it. There's some of these things, no money down. You might have no down payment, whatever, even 25% down. You're still borrowing 75% of that cost. And that entire amount goes into your basis. And that's where you determine your depreciation. And so you can have these massive deductions that may be able to offset your other income. And you didn't really come out of pocket with any money. And the asset that you're depreciating is actually appreciating in economic terms. And so, does it make sense? I don't know, but that's the way the code works. And so you can't really blame real estate developers, anyone who's investing in real estate, for playing the game, because that's how the game works. And there's huge benefit to it.
Hey, I'll take it. Then you can get the G-Wagon, right?
That's right.
What about crypto? I know that's a hot topic these days. And I guess throw in there just electronic payments, Zelle, Venmo, the crackdown on that. And then I guess they recently said, hey, we're backing off. What's up with that?
Yeah, there's a lot going on with crypto and digital assets generally. When we look at crypto and crypto assets, so thinking about cryptocurrencies, but also thinking about things like NFTs that theoretically reflect ownership in either a digital or real world property, we have two huge things we got to consider. One is the actual enforcement mechanism. So how do we know if someone's buying and selling crypto and has gain, has loss? How do we know who that person is? How do we know the amount of the gain or loss? How do we actually enforce our tax laws as to these particular types of transactions and assets? And that's a problem. And we just don't really have a good way of doing that right now. And so, the IRS, Treasury, trying to find ways in which we can have some sort of workable enforcement mechanism. And the general way that we would have that, just like when people are buying and selling stocks, if you have a brokerage, if you have an intermediary, we have a reporting obligation to the IRS from that brokerage. And so we could do the same thing if someone's using a brokerage, but of course you don't necessarily need to use a brokerage in the traditional sense for these blockchain-based transactions. So things get really tricky there. There's all kinds of implications, practical implications that make it really difficult, but there's reasons for it, because certainly with crypto and blockchain, we have this inherent aspect of anonymity. We have an inherent aspect of decentralization. And so it gets really difficult for enforcement. And then the flip side of that, or maybe just a related side of that, is whether this stuff's taxable at all. Are these transactions taxable? If they are, which jurisdiction, so which country, which state should be able to tax this gain? If it's, where is this sale located? It's out there on the blockchain somewhere. It is inherently decentralized. It's nowhere or everywhere. I don't know which. It doesn't really matter. And so we're at a point now where we have these really pressing questions on the taxability piece too. So taxability, sourcing. If your statute doesn't impose tax on this, well, then it's not taxable. And so is your statute broad enough to impose tax on these new types of transactions and these new types of assets? And so, there's a lot there on both sides, the enforcement piece, and then also on the taxability and sourcing piece as well, which is going to be really interesting for all of us tax nerds, at least in the years to come.
And how's that going to look if the United States maybe develops a centralized currency? Is that going to look more like a Zelle, or is that can we not carry cash anymore? What's going on? They're getting rid of pennies.
Yeah, it's interesting. So there's kind of 2 points there. One is that generally speaking, the U.S., our premise is that we do not have a digital currency and that anything like Bitcoin is not considered a currency. Other countries have disagreed with that, though. And so other countries actually consider Bitcoin to be a currency. And looking at our own, just the paradigm that we have within our tax laws, we treat currency transactions very differently than we do asset sales and asset transactions. So that's an important distinction right there. But you mentioned Venmo and Zelle and things like that, our electronic payment, payment processing platforms that we have now. A lot of P's in there, payment processing platforms. And the situation there is very similar to what we were talking about on the enforcement piece of it's easy for people now to be able to enter into these transactions and avoid taxes, avoid detection at least of taxes. So you pay someone instead of writing out a check, now you're just going to pay someone using Venmo or Zelle or something anonymous like Bitcoin. And so how do we deal with that? And so that's why we do have now this push, which there are a lot of practical implications, especially for providers like Venmo and Zelle. But these, should we file 1099s, have a requirement for Venmo and Zelle to file 1099s for every little transaction? Should we have a threshold? Should it be $600? Should it be 20,000? So where do we draw that line where we're still getting enough compliance, but we're also having something that's just practically, workable solution?
I saw an online poll. It said 27% of people would get a tattoo of the IRS on their body if it meant never having to pay tax the rest of their lives. So people are always trying to get out of it.
Yeah. I'm surprised that's not 100%. I think anyone who's ever paid a meaningful amount of tax would probably do that to avoid
Well, they didn't
pain.
say how big or small, location. I think we're going to get a little more specific there.
Doesn't matter. You can put it, Mike Tyson right on my face if I never have to pay tax again. And it's one of those things too. Anyone who has ever had to write out estimated payments, so actually writing out a check, or now you can pay with your credit card and pay your fee. So that's its own thing. But write out a check for a lot of money and send it into the IRS or send it into the state taxing authority as an estimated payment. It's not nearly as painful when your employer just withholds it and you see your direct deposit statement and it was taken out. But if you have to look at the money coming in and it seems great and you're happy, and then you have to write out a check and you see that money going away, that's probably more painful than getting an IRS tattoo.
Yeah, I could see that. I think my kids are going to be some of the first to genuinely ask, what is a check? Why would you, just doesn't make sense.
Back in my day, people used to pay for groceries and stuff with checks before we had credit cards. So you're waiting in the grocery line and someone's trying to write out the check.
Yeah, back before drones were delivering things and all sorts of crazy stuff. Let's talk about something else people may not know about. I didn't know about it until last year taking your class, the TCJA, Tax Cuts and Jobs Act. That was a major tax reform. And I don't know if I stand for the average person, but I had no idea.
Yeah, it's really important because it impacts average people. It impacts overall much broader than just what tax lawyers are dealing with. And the TCJA, so first of all, it's interesting, you said the term tax reform. It certainly was in many ways tax reform. A lot of the more senior tax lawyers out there who lived through 1986, which was truly the last time we rewrote the tax code. That was true tax reform. They say that this TCJA was not tax reform because it wasn't revenue neutral, meaning we rewrote the code in a lot of ways, but it's costing us, the federal government, a lot of money. Initially estimated, I think, 1.2 trillion. And then it was estimated it was going to be 2.2 trillion at the end of the day, these kind of dynamic scoring of how much these cuts were going to cost. And so a lot of the old guard said, this isn't really tax reform. This is just borrowing money to pay for tax cuts. That's not reform, regardless of your perspective. Yeah, exactly. Just print it or borrow it. It's fine. But regardless of your perspective, the biggest piece of change with the TCJA and the cost was reducing our corporate tax rate from 35% to 21%. And so people see that might not affect them directly. To pay for that cut and again, we still borrowed $1.2 trillion to do it, but we also had to have some other revenue raisers in there as well. And so we had a lot of limitations that actually do impact people. The biggest of those probably is the $10,000 state and local tax deduction cap. And so if you live in a state that has a personal income tax, or if you own property, your own home, your principal residence, and you're paying a lot in property tax, a lot of states have very high property taxes. Normally, you were able to deduct all of that for your federal income tax purposes. So if you paid $100,000 in New York income tax, and if your house, you're paying $50,000 in property tax, you were deducting $150,000 off of your tax return, your federal tax return every year. All of a sudden, 2018 hits, and that's gone. Now that 150 drops to 10. And that's a huge difference, And so that has really impacted people. There's the conversation about that is really interesting because of the distributional impact. So who's impacted by that? Is it people who live in high tax states? Yes, although it's usually very wealthy people who are now hit with that. And so you see even a lot of progressives who like this idea of limiting that deduction, whereas you might see some conservatives who say, oh, we shouldn't do that, depending on who their constituents are. So really interesting to see how that's sort of playing out politically. That's set to expire in 2025, after 2025, but we'll see how that turns out. And that's also probably a topic for another podcast, but there's this that has then spawned all these workarounds. So pass-through entity tax workarounds that all the states have now. And those are only available to business owners, small business owners, essentially pass-through business owners. And so the distributional impact of that. So they get the benefit of it, but not if you're an employee. And if you're an employee, you don't get to deduct a lot of things. So again, going back to the discussion of the G-Wagons or maybe your home office during COVID when you're recording your podcast or whatever it might be, if you're an employee, you're not going to get the benefit of any of those deductions because the TCJA said miscellaneous itemized deductions, which is what those would fall into, if you're an employee, are suspended completely. You don't get any of those 2018 to 2025. Independent contractor, yeah, you can get those. Employee, now you can't. So now we have another distributional impact of employee versus independent contractor and disparate treatment just based on that. And who knows who's an employee and independent contractor? That's a discussion for probably 10 other podcasts. So.
Floridians heard state tax and just completely closed their ears. We don't know anything about that. Although if there's a deduction and we're paying federal taxes, we could technically be subsidizing this new thing in a way. Am I right?
Yeah, that's exactly right. And so there was actually a lawsuit filed by some of the higher tax states that have personal income taxes, and saying that this whole state and local tax deduction cap is unlawful and unconstitutional. And the flip side is that people say, well, we that are in a state that don't have high taxes, we shouldn't subsidize these other states. And they can increase their taxes because we're subsidizing them. The flip side of that argument is, well, if we look at how much money is generated at the federal level and then flows back down to the states, that's not really a fair and correlated amount. And so you might have states that don't have a lot of these tax revenues going to the federal government, but take a lot more. And those might be the low tax states like Florida and Texas. And so, that's sort of a federalism type of discussion that we see. But yeah, there is that subsidization piece, and it's interesting, and there are multi-layers as you start to dig into the conversation.
Did I hear some Reaganomics in there too? Maybe a little bit, some trickle down.
It always just trickles down, yeah.
So let's round out this tax discussion with the gasoline tax article you wrote. I thought that was fantastic. How could America's problems be solved by paying extra tax at the pump?
Yeah, that's by far, I would say, the most controversial thing I've ever written. It's a really long article too, and probably too long to even discuss in this podcast all the details of it. The reason it was such a long article is because I really wanted to address all of the counter arguments. So if you just read the title and you're thinking, all right, well, $11 a gallon for gas, like that's crazy.
What?
Although during COVID, I think we got close to that out in California. But yeah. $11 a gallon, that's crazy. Why would anyone ever say that that's a good idea?
Yeah.
And the long-term impact, at least, is that if we raise the level of gas prices to a degree where demand drops to zero, then we're not going to have people buying gas anymore. And what that means is that people are going to be more likely to go out and invest in electric vehicles, right? And when I wrote this article, I guess it was back in 2008, no one had heard of this small startup Tesla, right? So I cite to this small startup named Tesla who is starting to make cars, and there's no infrastructure, but maybe someone will build an infrastructure, and they did. And maybe it takes a visionary like Elon, for all of his other faults, to do that and to do something that might not make sense in a short-term economic way. But that was really the whole gist of it, is if we raise the price of gas enough to the point where demand drops to essentially zero, then people are going to find other avenues. And those other avenues might actually save them money long term. So instead of paying all of the tax and all of the cost of gas, now maybe we can do something in a more effective and efficient way that's going to save you money. And the people who drive the most stand to save the most. And so that was really the premise. And then kind of an underlying or maybe a little bit more of an attenuated premise is that if we, the United States, are able to have some sort of energy independence, then we can save potentially trillions of dollars in our oil security costs across the world. And so to the extent that we can do that, and we won't be beholden to certain countries that are developing and selling a lot of the oil. So there are those security benefits too, to doing something like this where we reduce our actual usage of gas. And to me, the easiest way to do that is just to increase the price so much that no one uses it. And the flip side is we're not banning gas cars. We're not California, right? We're not banning, all of these, the ICE, internal combustion engine vehicles. We're saying you can have that if you want. It's just that you got to pay to play. And you have your decision to drive around in a gasoline vehicle has consequences. We call them negative externalities, and that costs money. And so you can pay, you should pay more. And we're going to internalize those costs. You pay those costs, and then the federal government can use those revenues, and state governments, if they want to increase their gas taxes, to combat those negative externalities, whether it's climate change or whatever it might be. And so to the extent that people still want to drive, they can. It's just that now they would finally be actually paying the right price for the negative externalities, for the consequences of their actions.
Which we might be seeing this in, another way with all the incentives with, I guess there have been some taxes in places like California. And I mean, it seems like we're headed that direction, whether your local mechanic will admit it or not.
Yeah, there's a ton of interesting stuff here. One of the biggest is that if we look at gas taxes and where that revenue goes, we hypothecate the vast majority of our gas tax at the federal and state level for the transportation infrastructure. And I think everyone's in agreement that our transportation infrastructure in the United States is crumbling. We need vast improvements. If you look at other countries, a lot of other countries are very, very far ahead of us as far as infrastructure development. And we don't have enough money now to fix our current infrastructure. And it's great if we have vehicles that are more fuel efficient, great for the environment, but it's not great for our transportation tax revenue. And so for every electric vehicle that's no longer filling up at the pump, now we don't have that gas tax to go into our funds. And so we're seeing a paradigm shift. In most states have so far, the easiest way is just to charge a registration fee every year and charge a higher fee for electric vehicles as opposed to traditional vehicles. The more accurate way of actually tying the benefit with the usage is to have a vehicle miles travel tax, or a VMT. And that requires tracking how far you drive and where you drive. And so from a policy perspective, that's great, because we are very closely tying the benefit, the usage of the roads, and the costs. We could say you drove this many miles and here's the cost. Or you drive a super heavy vehicle that's destroying the roads. Some of these new electric trucks are 7,000 to 8,000 pounds. And so you should pay more if you have this vehicle and you drive more. But a lot of privacy concerns with that. Do we want both the federal government and the state government tracking every single move that we make? I mean, as of right now, everyone's walking around with a phone in their pocket, so Apple and Google are tracking us anyway. But right now, at least, the VMTs don't seem to have a whole lot of popular support, although there are several states that have pilot programs out there for these VMTs. And at some point, we're going to have to do something different. The gas tax just isn't going to be able to fund the transportation infrastructure.
Yeah, people already don't even like Progressive or State Farm putting a little thing in your car to take off like 20 cents or however.
Yeah, I'll pay a little bit more for my car insurance premium. So.
Yeah. Let's move on to your big law experience. So a lot of law students love big law. If you go on Reddit, that's pretty much all they ever talk about is big law. I don't know why it's become like that. I guess it's from the high dollar amount and typical, people got to take out student loans. But what was your experience? I mean, you were at the Pinnacle in New York. Tell me about it.
Yeah, so as to the actual work, so we'll come back to the compensation in just a minute, but as to the actual work, it can be really, really fulfilling. And like anything, it kind of depends where you are, it depends the group that you're in. I ended up doing a little bit of corporate law initially in Atlanta, and it was fine. I liked it. There were certain aspects that were challenging, but it wasn't all that challenging. And then I shifted into tax. I got my L.L.M, shifted into tax, and started doing that up in New York. And that was amazing. I mean, every day was something new. There was so much work to be done. You never had to worry about things slowing down. There was so much work to be done, and everything was really challenging, really complex, and really interesting. You're trying to figure out how this all works, going through the legal analysis. It's not just doing doc review. It's not just doing diligence. You do diligence spreadsheets and going through contracts. And so, that stuff needs to be done, and that's fine, but you're not doing that in the tax world. It's much more doing structuring, very large acquisitions, looking at new products that are coming out. What are the tax implications? Where should this company be filing their tax returns? How do these things play out? These very complex transactional structures. What's the tax implication of doing it this way versus this way? And so it was really, really interesting, the actual substance of the work. And so the hours flew by. It's fine if you're, I guess, over 10 years, I probably spent 35,000 hours. And that's a lot, but that's a lot of experience too. I got a lot of experience doing that, and it was all interesting. I don't think I ever did busy work in my practice, which was great. So that really helps. The stress, obviously, the hours, that's a downside to it. And part of that is the compensation. That's why these firms are paying what they are. It's not necessarily, you're not curing cancer. You're not a rocket scientist. You're not charming and talented. The reason that you are getting paid what you are is to bill hours, get the work done and bill the hours, and the clients will pay. And that's how it's a simple business model with the law firms. And so, that's sort of the flip side to it. But the compensation certainly now is really impressive at the higher levels, the big law levels. It was when I graduated from law school, the New York salary started at 160. And as of now, I believe it's 215 plus bonus. Senior associate, so an 8th year associate with a bonus, I think is around 550 a year.
Not bad.
So yeah, not bad at all. Not bad at all. And so we're seeing that too, not just in New York. It used to sort of just be New York, DC, or really maybe Chicago paying that type of scale. But with remote work and with COVID and with people wanting to be in other offices, we're seeing just from a competitive perspective, more firms that are willing to pay that New York salary scale or something close to it in other markets. And that can really work out well. If you're in a state like Texas, you go to Dallas or Houston, you have no state income tax, no personal state income tax, and you can make $300,000, $400,000, $500,000 a year as an associate in a big law firm. That's pretty great. And on top of that, obviously, if you progress up enough and you make partner and continue to progress, make equity partner, the opportunity to potentially bring in 7 figures a year is there as well.
And that's typically takes about 7 years on average, or varies?
Yeah, the traditional partner track is 8 years.
Gotcha.
A lot of firms now have inserted a stop at counsel. So you go from associate, oftentimes you get promoted to a senior associate, but that's not as formal as in some other business models. And then you get promoted to counsel, and then you get promoted to partner. And that at the partner level, it might be they call it a junior partner, a non-equity partner, or an actual equity partner. A lot of firms only have one tier of partnership. And so everyone's an equity partner, but you might have like very, very, very little equity to start. And so there's not a lot of functional difference between a non-equity and equity partner in that regard. But that's sort of the process. And just one corollary to that is that if we look at the tax world, we also have Big Four accounting firms. And those are great, great opportunities as well. And you can progress up there. They pay well. It's not quite as high, but in the big markets, you can probably start now at 175-ish. So really not that bad. I would take it. You can look at those opportunities as well. And it takes a little bit longer to make partner at a Big Four accounting firm traditionally, maybe 12, 13 years, and fewer people do, but you're also competing with a much larger base. Kind of the pyramid is more like that, where you have CPAs and non-lawyers who you're competing with. So you have kind of a better chance at making partner if you have a JD, and especially if you have an L.L.M as well. And the upside there financially, if you make partner, is huge. Oftentimes more so than law firms.
Do you think, I feel like I hear the words, the market's oversaturated, thrown around so much, like kind of willy-nilly a little bit. You think that's true in your estimation? I mean, there's always more businesses, there's always more problems to solve, and there's always more laws. So
yeah, I think it's very specific to the subject area and the geographic area. I think there is a vast need for tax lawyers, and there always will be. This stuff's never going away. It's always going to change. Every time a new bill would come out, we'd call it the Full Employment Act. They're always going to be employed, always going to be employed in the tax law world, whether that's on, so at the Big Four, they need tax lawyers. You can't practice law, but they want those with a tax law background, because every publicly traded company has to be audited for financial reporting purposes. So one of the Big Four is going to be the auditor, the financial statement auditor, and then someone else, some other Big Four, maybe all three of the other Big Four, they're going to be advising, right? So they need to put together the returns. They need to determine which return positions to take. How do we set aside our financial statement reserves? And so just on that piece, and that's never going on. That's just a constant. That is what it is. It needs to happen all the time for a publicly traded company. And so that can't go away. And then you throw in changes in tax laws, and it just sort of amplifies exponentially. And then you throw in international tax, all the different countries and potential reforms globally. And then you throw in state and local, and look at all the ways in which those jurisdictions are approaching things and different tax regimes. It's income tax, it's sales tax, you have VAT. And on the international stage, you have property taxes, excise taxes, new capital gain taxes, Maryland's digital advertising tax. It just doesn't end. And so the tax law world is not oversaturated, and I don't think it ever will be. Other areas, though, maybe. And geographically, that's certainly an issue too. We're here in Florida, and a lot of the grads want to stay in Florida, and I get it. It's beautiful down here. And the downside is that we just don't have a super sophisticated legal market in Florida, particularly on the big M&A and on the tax side. That stuff is done out of New York, DC, Chicago. And so, that's just where it happens. And people are like, oh, well, these big private equity companies are moving from New York or Chicago down to Miami. And that's true, but it doesn't mean that they can't continue to use their New York lawyers for these deals. And so we're not seeing that. It's not the old days where you're going to walk down the street and go see your lawyer in person. You should do that to the extent you can, and that's maybe a separate conversation, but you certainly don't need to do that. So your lawyer doesn't need to move with you to Miami. A lot of them are, because it's great and there's no personal income tax down here, but they don't need to. So it's not, all the business is moving down here. A ton of people are moving to Florida and Texas, but you're just not seeing the legal infrastructure follow as quickly and as kind of robustly as a lot of people might think it should.
Do you think it'll eventually come?
Not because the clients are moving here. I think that if it does, it's because the service providers themselves want to be here. And so you're seeing more and more offices opening up in the Sun Belt, whether it's because of the tax climate or just the climate. And so people want to move to Tennessee. They want to move to Texas. They want to move to Florida. And if they can do that, and there's more of an allowance of that when you're looking at bigger employers, then I think we're going to see more and more of that, really just from the personal perspective of people moving to states like Florida, but not because they have to move here to service their clients any better.
Gotcha. With kind of segue on that business note a little bit. Let's invoke Elon Musk's name again. I don't think you can have a conversation without talking about him these days for some reason. Not sure why. I guess he's
Yeah,
just involved in so many
he's
things
everywhere.
everywhere.
Yeah,
But he's come out on certain podcasts and said there's too many support positions. So like accountants, lawyers, consultants, and we need more engineers. We need people actually making things. How would you counter him? I would think you'd be in favor of lawyers and, the necessity for that.
Yeah, I don't know that those things are really mutually exclusive. I mean, I think we can have, and we need support staff. We need, that kind of thing. We obviously need coders. But yeah, builders are great too. And particularly, and I think that he's looking to have more of a shift back to some of our traditional economies, like manufacturing. That was something that essentially had died in the United States and has really been revived. And he's working to do a lot of that, and as are a lot of other companies, and bringing that back to the US. So to the extent that's happening, or is a good thing or a bad thing, he might say that, but he also has robots now that are assembling and apparently attacking workers in his warehouse. So it is what it is. And to the extent that things can get automated, I think they're going to, whether that's manufacturing that gets automated, whether that's tax compliance that gets automated. I think all the big four now probably have their own internal software for compliance that they're trying to automate, and AI, right? I guess we also can't have a podcast, or we can't have a conversation these days at all without using the term AI, or it'll definitely never have the keywords and get the clicks and the views. And so, everyone's talking about AI, and they're investing. Everyone's investing millions and millions and millions of dollars into AI. Whether it's actually AI, or we can get to, we can get into debates about what that means, but it's automation, right? We're trying to make our automation better, more efficient, and smarter. And to the extent we can do that across the board, I think companies are going to, because it's saving them money, right? At the end of the day, humans, unfortunately, are expensive. And for a lot of businesses, the labor costs are the highest cost they have. And to the extent that they can reduce those, then companies, I think, are thinking about doing that. That's obviously bad for the job market, potentially bad for the economy. It just requires shifts, at least, from our kind of the way in which we traditionally done things to having new jobs as the robot overlords or whatever it might be. So,
do you think AI will take over lawyers completely?
I don't think so. I don't think so. And again, we can have a discussion about what AI really means. There's a difference between machine learning and AI. There's a lot of what is billed as AI for PR purposes is really just kind of normal computer code. It's just automation. It's nothing really that special or new or novel. But you have to use the term so you get your market cap skyrocketing after your earnings call or whatever it might be. But the more automation, it's definitely going to, especially at the lower levels, start to cut into things like lawyers, right? Like document review. So to the extent that that's your career, yeah, that might get upended by this. To the extent that it's due diligence, yeah, that might get upended, or just sort of the commoditized types of legal practices, real estate closings, things that don't require a ton of skill and specialization, and that aren't one-off. Then yeah, that stuff can get automated, and theoretically that's good for the markets because the prices will go down and we'll have more availability of legal services. So I think that's an issue. If you're looking at like sophisticated tax planning, no, I don't think that's ever going to go away. Now, maybe it becomes a tool and we're going to have to know how to use that tool, but maybe that makes our lives better because we can focus more on the cool stuff than doing things that are sort of rote or really kind of menial tasks.
Yeah, I think things like LegalZoom, I mean, that's simple. It can help. Maybe it's so simple that you don't even need AI or, whatever they're calling it to do it. But
yeah, that stuff's interesting. At the end of the day, some of those things can get you in more trouble, right? Yeah, we have the tools, we have AI, but how do you know that it's right? So, we've seen this with ChatGPT and these large language models. They call it hallucination. They just make stuff up. And so are you really going to trust that? Or are you better off doing it yourself and knowing what you don't know and knowing what's potentially right or wrong and checking it, as opposed to trusting something that might be wrong? And so, there's a lot. It's certainly not perfect. I don't know that it's sort of mainstream yet, but to the extent that we have the democratization of legal services and more access to legal services, I think that's a really good thing. We just need to make sure that they're quality enough, or we end up putting people at a disadvantage. And not to talk negatively about any particular provider, but if it's some legal forms, but you can go to the Secretary of State's website and find the actual official template and do it all online, right? From Florida, we can go on Sunbiz and we can form an LLC, and you can do that directly. I think you're better off doing that than going through a provider that's trying to provide a very kind of quick and dirty way to do it on a multi-state basis, and it might not be right. And so, a lot of times you're better off doing it the right way as opposed to trying to do it in the easiest, what you think might be the easiest way.
Yeah, that makes a lot of sense. Speaking about forming businesses, you've been around businesses, you've advised them. What do you think are the biggest themes you see that translate to why most businesses fail?
It's probably poor planning and preparation. I've seen
They use LegalZoom.
Yeah, exactly. No, again, nothing against LegalZoom, but it's more of like, you can even ask, what's your business plan, and trying to put together a business plan. But people put together, if they're forced to do it from a lender or something else, they put together a business plan and it's just not what it should be. And so there's definitely a lot of that. I think a lot of people start businesses and it's a passion project, right? And so I'm doing this because I love restaurants. I love eating. And so I'm going to go and start a restaurant. And so you have to think about, yeah, exactly. I mean, you can tell that I do. So you have to ask, why are we doing this? And why are we starting this business? Do we have the skills that we need? Do we have some sort of business model that's going to set us apart and be sustainable? Is this short-term profit or long-term? And if it's going to be a long-term profitable idea, but it's going to require a lot of capital at the outset, do we have a way in which we can do that? What's our cash burn going to look like in these first few years? Do we have enough of that laying around? And when are we going to be profitable? At the end of the day, you need to be profitable to be sustainable as a for-profit business. And thinking about the ways in which you're going to do that. Do you have a unique business proposition? And have you thought through the ways in which you're going to handle that? And then crazy stuff happens. COVID happens, pandemics, government change, government restrictions on your business. There's so much there that can impact your business that it's very difficult for a lot of startup businesses.
Did you see that poor planning, you're just not prepared for when crazy stuff happens?
Yeah, it's tough. It's things, maybe they're foreseeable, maybe they're not, maybe they're related, maybe they're not, but even just inflation. If all of a sudden your business inputs, the cost of your business inputs double, what are you going to do? What are you going to do at that point? Can you just double your prices? Who knows? Maybe not. And maybe there's a competitor that doesn't have to double the prices. They'll just eat the loss, or they can deal with a lower profit margin until they put you out of business, and then they can increase their prices. And so, kind of thinking about those things as well. And I think a lot of business owners aren't thinking about that. And part of it is just that people tend to be good at something, but it's not necessarily at running businesses. And a lot of founders especially don't want to let go of the business, or don't want to delegate, or can't delegate. And so that's a problem too. And just, one example is law firms. We talked about big law. Those are businesses. And guess who runs law firms? The lawyers, the partners. As a partner, you're an owner of the business. And yeah, maybe you elect a managing partner, or maybe there's an executive committee, maybe you have a CFO and a general counsel, but at the end of the day, you have a vote, and your business is being run by a bunch of lawyers. Some are business people, some have business sense, many don't. And so, to the extent that you have a multi-million-dollar business and it's being run, first of all, for better or worse, a democratic fashion where you have 100, 200, 300 people voting. So good luck trying to get decisions made in a proper way. Then a lot of people don't have the business acumen. So how does this work? And you end up with their own big law firm, but kind of their own small businesses within that. So I think there's a lot of that where you're thinking about, how are we really going to run this business? I might be good at X, practicing law, or being a doctor, or being an artist, or cooking, whatever it might be. But that doesn't mean that I'm going to be able to be a good business person and going to be able to have that success.
Yeah, I've seen a lot of lawyers hiring things like people like COOs and things of that nature. Because, yeah, what do you know? I mean, just go out there, hang a shingle, get the G Wagon. All roads lead back to the G Wagons,
That's right.
right? And the
That's right.
tax write offs.
Absolutely.
So, from advising businesses, from being in big law, why the switch to academia? Was it just time?
It's the best job ever. I absolutely love academia. I love Stetson. And the big reason is really the students. That's why I love Stetson so much. The students and the colleagues are amazing. The thing I liked most about practicing was really two things. The biggest was being able to mentor junior associates. So have hopefully very ambitious lawyers who are coming in. They don't understand the substance yet, but they're willing to work hard and get better, and spending the time to help them get better and show them what they need to do and how to learn. And then seeing that transition and seeing them now making partner in big law is incredibly fulfilling to me. The problem with doing that, though, is that you're doing that always within the constraint of the billable hour. So to the extent that I sit down and talk with someone to train them, then we can't bill the client for that. And so both of us, the associate and myself, are working longer hours, and we have billable hours we could be billing that we're not. So we're foregoing that revenue all for this. And at the end of the day, if that person wants to learn and gets better, it's worth it. It ends up making a lot of sense as they continue to build. It's a long-term investment. If they don't, that's a problem. And so that sort of mentorship component is really what I enjoyed. And now I get to do that full time. And so that's a great aspect. And without the constraint of billable hours over everyone's head. The second piece that I really liked was the intellectual aspect of it, the intellectual curiosity of being a practicing tax lawyer in particular, where you're able to dig into things and ask why. Why is it like this? How do I figure this puzzle out? And being able to do that was great. And now I get to do that, and I get to focus on whatever I want. And so that's a huge, huge aspect as well. It's not what the client is doing, and that's great. And that's how you learn a lot of things you wouldn't otherwise even know to look into. But now I can really think about whatever I want. It might not be something that would pay the bills, like sports taxation, something I love. So maybe that's not paying the bills, but now I get to focus on that and really dive into some of the interesting applications, which may have broader application too, to things where people are going to pay people for. But those are kind of the two aspects that I like most about practice. And by moving into academia, I'm able to really focus on both of those things.
That's awesome. And you get to title all your works with great names. I think my favorite was What to Expect When You're Expecting Tax Reform.
Yeah, it's especially in the tax world, you try to make the article titles a little catchy, but...
Yeah, I actually told someone, I was like, yeah, I'm having my tax professor on, super enthusiastic about tax, loves it. She was like, wow, that's I don't think I've ever heard those two together. But it's awesome.
Tax is great. Tax touches everything, right? And so maybe you're doing big corporate tax stuff, and if you love business and you love very complex puzzles, that's great. But maybe you're not. Maybe you're doing something else. And tax touches policy. You can go and you can be a policymaker, and you're always going to have to deal with this. Even if you just like studying political science and sociology, it plays into all of that. So, or environmentalism, right? We were talking about gas tax. We can talk about carbon taxes. It plays into everything. So really, whatever you're doing, tax is always there. And that's why it's interesting, because it's always there, and it impacts, it distorts behavior. And sometimes that's unintentional, sometimes that's intentional. And so, how can we distort behavior? Well, we can regulate it or we can tax it. And what's better? And oftentimes tax is better than regulating and banning something. We're just going to actually impose a tax to maybe drive people a certain way, as opposed to banning or regulating whatever that particular activity is.
That's awesome. Well, what do you have coming out next? I saw you have a couple of forthcoming papers. Where can people find those if they want to see them?
Yeah, so if you go on SSRN, which everyone should be checking out, because SSRN is a free open source website where you can basically see every article, especially in the legal world, so law review articles that essentially get published before they're published. The publication process can take a long time, and so you can find those articles up on SSRN. The most recent one I have there is called Taxing Tokens, so looking at the taxability of those crypto assets that we were talking about earlier in the podcast.
Nice. And
how that might work, especially when we start tokenizing real world assets. So if we start looking at, I have a house or I have a car, instead of selling that in a traditional way with a title, something like a title, instead maybe we can use an NFT to transfer that in a much more efficient way. But there are a lot of implications, both obviously in the tax world and outside the tax world. But that's the focus of that particular article, which you can find on SSRN.
That's great. Well, Professor Appleby, I appreciate it. Thanks for coming on. This is awesome. I know we're both going to go get some IRS tattoos after this. but seriously, great. Thanks for being on. Thanks for being the first guest. Hopefully
thank you very
the first
much.
of many.
Yeah, thank you so much. I really enjoyed it, Logan.